Good morning and welcome to another great edition of Money Truth Moments with our very own Money Truth expert, Whisper, and just financial guru all around. Good morning, Judy. How you doing?
I'm doing great. What a week. What a week. How are you doing, Carlos?
I'm doing fantastic as always. Our Tuesday mornings are always what I look forward to because we get to learn. It's class time, right? And it's just a lot of great content that we've been putting out there and a lot of great wisdom you have shared as well too. So, folks, if you're just joining us for the first time, welcome. Make sure that you're following Judy at judycopenbarger.today. And today we're going to talk about another subject that sometimes we don't want to know about it, but we have to know about it. And that's insurance decisions that quietly impact our budgets, right? So in this episode, we're going to learn how insurance decisions affect our monthly budgets and why reviewing coverage always matters. So get ready, sit back, share the stream, take some notes, get a pen. And what do you say we get going, Judy?
Let's do it. I'm ready.
All right. So let me ask you. So people often think of insurance only when something goes wrong, right? So why does insurance actually impact the day-to-day finances too?
Well, you have to pay for it, right? So there's premiums. And so people think when you think of insurance, you think I have to insure my car. They're going to make me insure my house. If you have a mortgage, that's a necessity. But then there's business insurance and life insurance and health insurance, which is often, in the news. All these different things that we're doing to protect the wealth that we're growing. And it's kind of like a greenhouse, right? You grow a garden and then you protect what's in the garden. And as you go through life, your garden will change. It will grow. We kind of go through life. Usually we peak, and then we decline, as we start spending down in retirement years. That's a typical statistical graph. But we want to protect what we're growing. In the early years, it might be a greenhouse the size of a doghouse, and then maybe the size of your garage. And pretty soon you might need enough protection the size of a hangar for a great big 747, right? And then later in life, we might not need as much protection, but it's about preparing for the what if. And there's a cost to that, whether it's quarterly, weekly, monthly, annual premiums. We know when those payments come because it's like, oh, you know, you don't really get an immediate, goodie. Like I went out to dinner and I had a beautiful steak, right? It's like I had to pay the premium and my car didn't crash. Shoot, now I got to pay it again. So that's the thing. It does impact your cash flow, and it definitely should be an important line item on your spending plan.
That kind of leads me to my next question. It's really having to do with just mindset, right? We always think of or we focus a lot of folks on choosing insurance just based on what the monthly price is, right? And it's that saying of you get what you pay for, and if you don't know, you don't know. So tell us a little bit about that. Why do they
It's
choose
so,
that?
yeah, it's so true. You don't know what you don't know, but there's the premiums include the coverage that you have. And so there's all these opportunities to have more coverage or less coverage. And I think the mindset comes into how lucky do you feel? And then all the values that we grew up with, learning about insurance or hearing our parents talk about coverage or maybe a mistake where they were overcovered or undercovered. And you just kind of learn from there's usually not a class, in my business, people have to take classes, but you don't usually have a class on insurance. What coverage should I have? What's right for me? The guy on the other side of the table wants to sell me, a higher premium product. Is that really what I need? Are the coverages right? Should I add to like my auto policy? Most of us have one of those, right? Or at least, should I have the coverage for a rental car? Should I have the coverage for a high comprehensive? That's fire, glass, theft, and acts of God, right? When the branch falls on your car or the rock goes through your windshield, things like that. Should I have that be a very high deductible or a low deductible? And it makes a really big difference in the premium that you pay every month or every 6 months or whenever you pay your premium. So definitely some considerations, but I can't blame people for not knowing. How would you know? Right?
You know, um, Folks, if you're just joining us again, welcome. Make sure you're following Judy at judycopenbarger.today. This insurance topic for today is affects a lot of our families. And again, you don't know what you don't know. And unfortunately, we sometimes get taken and we're undercovered or we're overspending on things. But when we talk about real life experiences, from what have you seen or what insurance mistakes do you commonly see that later affects family financially?
Yeah. Well, you just mentioned it, under coverage. I want to save on the premium so I don't have enough coverage. Where, one common mistake I see is people will put a very low deductible on the comprehensive coverage. You have comprehensive and then you have collision on your car. So comprehensive is those things like the windshield and things like that. Well, if you put a claim in on your auto policy, and if you've never had, God bless you, right? But most of us have had some claim if we've lived a while. If you put a claim in, the cost of your insurance goes up because the accident-free discount is gone, right? It costs you to actually make a claim. So most people don't. And so if you have a $50 deductible on, let's say, your windshield, and it's a $300 windshield, you're going to pay $50. They're going to pay $250, but now your insurance premium goes up probably at least that amount every 6 months. It's crazy. So why not have a high deductible on that part of your insurance, the comprehensive part of your insurance, because you're not going to make a claim anyway. Save the money because the premium is much higher on a low deductible. So those are things that you can do. Most people don't know. I'd say one mistake is they have the wrong coverage, and that's an example of maybe not the right coverage for you when it's cost and value that you're measuring, or they're undercovered. A mistake that we made in our early years is we didn't have the rental car coverage. And we had a car totaled when our kids were young. We had a car totaled. Everybody was okay, but they had the car in the shop for 8 months. So we were without our car for 8 months. If we would have had the rental coverage, it would have cost more for them to rent a car for us than to keep it. They would have totaled the car and got us a new one right away. It's like, we didn't know. And if you look at that, rental car is like $3 or $4 every 6 months. It's not very much on most policies. It's just a few bucks. That would have been good to know. Now we know, and we keep the coverage. So things like that. I think another mistake people make is they have beneficiaries wrong. And so now we're talking about life insurance and any insurance that has a benefit that goes to someone else that's not you. They have the beneficiaries wrong. And that might be where you put your parents on there and then later you get married and you have a family and you just never really think about it. Well, then you die and the money goes to your parents, not your wife and your kids, or your husband and your kids. So things like that, just making sure beneficiaries are right, coverage is right. I think it's worth, every time you have a premium coming up, worth revisiting. Do I have the right coverage now? Because life changes, your assets change, the protection you need changes, that greenhouse needs to be adjusted based on what's going on in your garden, right? The wealth that you're accumulating. So those are some things that I think are worth revisiting, common mistakes that I see.
And I'm going to ask you this as a follow-up too, because we tend to follow what the latest thing is that someone told us regarding insurance. Oh, you should be with this company because they're doing this, or this company's better because they're doing that. And like we've talked about before, like not every insurance company is created equal. Not every insurance agent is also created equal, right? But when you look at your clients, when you've looked at people that that you've helped with of trying to find that right coverage, how should people balance affordability versus protection, or with protection, I should say?
Yeah, that's a trick because you definitely don't want to be insurance poor and buy every policy and get the max. And I've had people come through our firm that come in with 15, 20 or more policies. They cover every little thing because they're so afraid. And we don't want to live in fear, but we want to have enough concern to be protected. So you have to do this, cost benefit analysis. What's the benefit to me? What am I actually protecting against? Life insurance is an example. So you'll have a young couple come in and say, okay, we've got two little kids. They're not even in school yet. Wife is raising the kids and she plans to homeschool and all of that. And husband's out, working. A typical stereotypical story, right? And you say, well, why would I have life insurance on the mother? Right? She's like, I'm not earning anything. I don't need to replace anything. Well, we do. So if we took mom out of the picture, she died and dad still has to go to work. And now he's got two kids that really need him. Is he going to be working more or less? Right? He's going to want to work less and maybe not much at all that first months or maybe even years. How are we going to replace the value that mom was bringing to the household? Maybe it wasn't income, but it was value to the household. What would it cost to replace her duties? So now we need someone to cook and clean and drive and teach and do all the things that mom was doing. That has a value. And rule of thumb, and this is what we're talking about life insurance. This is probably just a good rule of thumb for people to know is like, how much should I have? The insurance agent says, I need that. Seems like way too much. I would say if you replace the value that you are to the household, whether replacing your income or the value that you're bringing in services, and then anything extra that you want to add to that. Let's say the value of mom's in this scenario, her value is maybe $80,000 a year if we replace what she's doing. You want roughly about 10 times that. So you can have recurring revenue come from an insurance death benefit to cover that, not just 1 year or 2 or 3 years, but for a long time. These are little kids, right? So it's something to think about. And then you want to add to that anything else. If you want to make sure that there's a mortgage free home for the surviving spouse and the kids to live in, if you want to make sure there's money there for education in the future or to help them with a wedding or to buy their first home, things you would do if you were there, you just add those amounts to the amount that you're looking for coverage. So that's just an example of analytics that you could go through, a needs analysis for life insurance. But there are so many other kinds of insurances, P&C, property and casualty. Those are insurances to replace your stuff, your house, your buildings, your cars, your trucks, that you use in your business, things like that. Then there's business insurance. What if you have a trusted, maybe mistrusted, but you have a trusted accountant, that works in your company, and all of a sudden money goes missing. Do you have insurance to cover against bad acts like that? Or if there's a fire or some flood or some terrible thing that happens to your warehouse that's full of goods, how are we going to cover that? So many kinds of insurance. This is such a broad topic. We really can't in a few minutes cover everything. But I think making sure that you have the right protection for the right reasons, the right amount, and that you review that often, that will really serve you well.
Folks, and if you're just joining us, please watch the beginning of the show as we are talking about great things related to insurance and questions that you may have that you haven't been able to ask anyone, right? So make sure that you are following Judy at judycopenbarger.today. And I want to keep the conversation going because we always run out of time. What great things that we talk about, right? So I know you're going to probably talk about this a little later, but tell me and our viewers, like, what simple insurance review should people consider this year, for example?
Well, I think some of the things I've mentioned, just going through every line item of coverage that you have, and is it the right kind? Another area of insurance is liability, tort liability insurance. And usually it's an umbrella that is attached to your homeowner's insurance or his standalone. But it's insurance that covers you if you are liable to anyone else. And a tort in law, a tort is when you hurt somebody or break their stuff, right? And then they sue you and they say, oh, you have a nice house, we'll take that. You have a nice bank account, we'll take that. And so this is your first line of defense, to have that tort liability umbrella coverage. So if somebody sues you, or if there's any like potential liability, they'll pop the policy first and say, okay, that coverage will take care of it. You can keep your assets intact. You're going to need that for your family and your business, right? So we'll take the insurance. And usually it's pennies on the dollar coverage like this. So I think most people that have any equity in property or any accumulation of wealth at all, they want to consider this tort liability umbrella policy. And that just covers, it goes with you. It covers you in case you have a car accident and there's not enough car insurance to cover. The slip and fall is a famous one. They step on the crack on your sidewalk in front of your house and sue you. But dog bite, anything, any kind of liability you might have in business or otherwise, where somebody sues you because you have assets and they want to get them to, replace a loss they have for some harm that you allegedly or enact have caused. That tort liability will go a long ways. Worth looking into.
No, definitely. And that's the scary part too. Like, you don't think simple things like that, you just don't think about until they happen, unfortunately.
And that's the thing, it's like we hate paying premiums. Nobody wants to pay premium. Then the time goes by and you didn't have a loss. It's like, oh, it feels like money, flushed down the toilet. It's like, oh, I had to pay that. But boy, when you need it, you want to make sure you have it. You just don't want to have too much, not too little and not too much. You want to have it just right. It's kind of like the Goldilocks, right? We want it just right. But those are things that can easily be reviewed. Every time you pay a premium, go over it with your agent or someone that is knowledgeable We've got in our material, we have so much information on every kind of insurance you can imagine in the protection parts of our training. So go through that, look at it. I mean, you can look at specific kinds of insurance that you might be thinking about. And maybe this conversation has prompted for you, oh, I might want to look into that and see if I have the right stuff. The problem with the industry of insurance is there's always someone on the other side. Usually your information comes from someone on the other side of the transaction, which can be problematic because there's a built-in conflict of interest. Well, of course, the person on the other side of the table wants to sell you something. That's how they make their money, right? It's commissions. And that doesn't mean that it's bad or the industry is broken or that people are ill-willed. It just means you want to make sure you have the right information to make the right decision for you and your family at all times.
So this is going to sound funny, but why do people often review streaming subscriptions more often than insurance policies?
Oh, that's a lot more fun. Streaming, you're thinking about the game you want to watch, the fight you want to watch, the shows, the movies, and all that stuff. Insurance is just like, I get a flat tire, somebody, fender bended me, it's like, that's not fun. And like I said, the premium, it feels like it goes out the window if you don't have a claim. Thank goodness. You got to pay the premium and you didn't have to make a claim. And nobody got hurt, all of that. But it does feel like money lost if you have that perspective. But just, if you just keep the image of the garden and the greenhouse, you want to make sure you're not overdoing it. You don't need a hanger-sized greenhouse for a little vegetable garden, right? But you want to have the appropriate protection as you grow your wealth. It doesn't do any good to get 25% return in your portfolio and have a huge 401k if you have a claim, something happens and you're liable and there's a claim, there goes all that wealth because you didn't want to pay a premium. So you want to make sure you get it right, but make sure you have what you need to have to protect the assets that you have.
And folks, like I said, time flies when you're having fun, and we are at the tail end of the show, so you guys know what that means. All right, it is our Money Truth Challenge, and I'm sure it's related to insurance. I'm gonna guess. All right.
It's a simple challenge. Just take just one insurance policy that you have already in existence. Take it out, look at it and say, is this the right kind that I need? Is it the right coverage? Am I paying too much? Should I get quotes to compare? Is there something better, more better, different that I can do with this one policy? Just one. Maybe next week or next month you can do another one, but just do one. That's your challenge.
All right, folks, you've heard the challenge. Also, we're going to remind you that if you have a topic that you'd like Judy to address or share some of her wisdom with that, please let us know. We'd be more than happy to put it on the queue for one of the topics. But any last parting words, Judy?
Make it a great day. Grow and protect at the same time. You can do it.
All right. And remember, we are here every Tuesday morning at 8 a.m. with the replays on Thursdays at 8 p.m. And follow Judy at judycopenbarger.today. You can follow all of her streams, all of her podcasts, and everything on that as well, too. So next week, we're going to talk about financial boundaries and why saying no can sometimes protect your money. So you're going to want to stick around for that. Until next week, you guys take care.
Bye-bye.